Is a new housing bubble being formed? That's one of the headlines getting a lot of attention right now, but it's not the only thing making headlines. Home prices up in February, new listings down more than 22%, mortgage application payments up 1.6%, average mortgage payment now more than $2,300. That's the average. I'm Ken Tyndall. Let's take a closer look at those weekly real estate news headlines and analyze what it all means. We'll get to the housing bubble headline, but I want to start with this. The latest data shows a modest increase in home prices nationwide in February. 8 of the 20 major metro markets they track reported lower prices. The 2% annual gain in February is down from 3.7% in the previous month. Miami, Tampa, and Atlanta again reported the highest year-over-year gains among those 20 cities. Miami had the highest with a 10.8% year-over-year price increase, followed by Tampa with a 7.7% increase and Atlanta with a 6.6% increase. However, all 20 cities reported lower prices in the year ending February versus the year ending January. 2 of those cities with the highest gains, Miami and Tampa, are in Florida. So there's this. Florida home sales down while prices remain elevated. Florida's home price sales dropped during March, but prices continued to rise according to new data from Florida Realtors. Last month ended with 26,161 closed sales of existing family homes. That's down 15% year over year, while the 11,188 condo townhouse sales were 23.5% below the level set 1 year earlier. But while sales were on the downturn, prices were on the upswing. The statewide median sales price for single-family existing homes in March was $405,000. That's a 2.1% increase from the previous year. The statewide median price for condo and townhouse units was $320,000. That's up 3.9% year over year. Buyers in Florida remain challenged by mortgage rates above 6% and economic pressures like inflation. However, more active listings means buyers have a bigger selection of homes, which could help slow down real estate prices. As far as housing supply, inventory rose in both March and the first quarter. Single-family existing homes were at a 2.7-month supply. Florida continues to be a hotspot for residential purchases by buyers from both in-state and out-of-state, and there is significantly more inventory available than last year. So that's Florida, but we have this information from Redfin. New listings of homes down 22.4%. The U.S. housing market shortage of properties for sale continues to worsen. Redfin reported that new listings of homes for sale fell 22.4% year over year during the 4 weeks ending April 23rd. That's among the biggest declines since the pandemic began in March of 2020. The absence of new listings is blamed on homeowners who are eager to retain their low mortgage rates and are unwilling to pay higher rates on a new home. The lack of inventory has resulted in faster home sales. Redfin found nearly half of homes on the market are selling within 2 weeks, the highest share in nearly a year. Homeowner affordability declined in March. The national median payment for loan applicants increased 1.6% to $2,093. That's up from $2,061 in February. So the average monthly mortgage payment is now $2,317. Take a look at the most expensive average mortgage payments in the country. Hawaii, $3,696. California, $3,399, and Massachusetts, $3,201. At the other end of the spectrum, average mortgage payments are least expensive in West Virginia, $1,700, Kentucky, $1,711, and Michigan, $1,742. So, is a new housing bubble being formed? A report from the Indiana University Kelley School of Business is predicting a brand new housing bubble is in the making. At present, demographic pressure on housing markets is at its peak. This implies continued strain on supply in the next several years, followed by long-run erosion in demand that can only be reversed by high levels of immigration. But the authors theorize that supply will eventually outpace demand, and the current bubble in demand generated by millennials will slowly deflate as baby boomers downsize their living space and age out of the housing market. Interesting academic study, but are we really looking at a housing bubble? As of now, mortgage interest rates are still expected to maybe fall or at least stabilize later in the year, but mortgage payments are likely to remain relatively high for most new buyers, at least compared to where they were a year earlier. So inventory will likely remain limited until interest rates fall and more homeowners are ready to sell. Housing bubble? Probably not anything like we saw in 2008. Remember, home prices plummeted after so many homeowners defaulted on those subprime mortgages and risky investments on mortgage-backed securities. Right now, homeowners who are falling behind on mortgage payments may be up from the recent historic lows, but nothing like we saw in 2008. If you go back to Economics 101, right now it just seems more like the market adjusting with supply and demand. It would be great if you could subscribe to this channel for more real estate updates, and you might also enjoy watching this video.